Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock, Neo stock, Lucid's LCID stock, Sofi Technologies SOFI stock, and we will quickly go over some of the main electric vehicle stocks at the end of the video, such as Workhorse, Electra Meccanica, Milion, and Lordstown Motors. We will start by discussing why this dip in Palantir's stock price could be a great buying opportunity for long-term investors, and we will talk about the latest and greatest Palantir stock news. Then we will discuss SoFi stock and why it can easily reach $25 even though one of its insiders recently sold 15% of their stake in the company. After that, we will compare Lucid stock to Neo stock to see which EV company will bring in more money for their shareholders. Go and press the like button right now for more Palantir, SoFi, and Neo stock news updates. Comment down below your thoughts on what is the best EV company besides Tesla. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. Palantir is a big data company that supports both government and commercial clients, which is fantastic because overall, the global big data market will grow by $247 billion at around an 18% compounding annual growth rate from 2021 through 2025. This will slingshot Palantir's growth, which is why investors may want to invest into this company when their stock price dips before the PLTR stock truly starts to gain traction in the market. The company already anticipates that their revenues will grow by 40% next quarter, so they can bring in total revenues for the year of $1.53 billion with around $400 million of free cash flows. And during Palantir's Q3 earnings call, the COO had this to say, and I quote, "I wanted to highlight three themes. 1. We are seeing more traction selling into the defense industrial base as a customer. Secondly, our work in automotive and more generally mobility is growing. And lastly, our work in healthcare is exploding." End quote. This quote perfectly reflects what we talked about earlier about how the global big data market is expanding, and clearly Palantir is expanding with it, which should really excite its investors. What else should really excite Palantir stock investors is that they're going to release new software specifically for the cryptocurrency market. And this just adds to the buying opportunity of Palantir as the company continues to expand even into the cryptocurrency and blockchain space. The COO also said this, and I quote, "We are going to give crypto companies credible AML, which is anti-money laundering platforms, to enable them to go toe-to-toe and beyond with the legacy players. We are going to deliver regulatory compliance so they can focus on distribution, and of course, they are welcome to pay us in crypto." End quote. According to analysts that were polled on CNN Money, Palantir has a hold rating, which means that you should not buy or sell the stock and instead just wait and give Palantir time. On average, the Palantir stock price target, according to analysts, is $24.50. However, I personally think that the stock is worth well over $28 right now, and if you can scoop the stock up below $21, then in my opinion, it's a great deal. With that being said, I'm also a huge fan of owning stocks through ETFs, and this gives investors diversification, and it helps you not to lose money. And a couple of my favorite ETFs that hold Palantir are ARKK, BIGY, IPO, ROM, and BUZZ. Next, let's talk about SoFi stock, and SoFi is a fintech company that basically does everything that's related to finance, including student loans, mortgages, etc. The average price target, according to analysts, for SoFi stock is $25.58, which means this stock is a good buy right now, especially if we consider their projected revenue growth of $1 billion for 2021 and $1.48 billion for 2022, which I think they're going to beat. Now, with that being said, we do have some bad news because Chamath Palihapitiya sold 15% of his stake in this fintech company, and he was one of the ones that actually had the merging company that took this company public. Chamath said he did this for three reasons. 1, he needed cash. 2, he was going to do it to invest into new investments. And 3, he's going to pour some of this money into Clover Health. However, Chamath Palihapitiya still retains 85% of his original stake in SoFi from the merger. But if you want to invest into a company that's been really beaten down lately, Clover Health is a fantastic option right now just because of how cheap it is. Now let's talk about Lucid Group, because their stock has been absolutely exploding lately, even though they only have brought in around $232,000 worth of revenue. This hype is mainly coming from their reservation numbers for their electric vehicles, which increased from 9,000 all the way up to over 17,000. They also have great global expansion plans, and they have received amazing reviews from customers after they have driven their electric vehicles. Lucid Group has also won the 2022 Motor Trend Car of the Year award, which means that it places higher than 24 other vehicles in 6 different categories when it comes to things like efficiency, value, design, engineering, safety, and performance. Their 2022 plan is to produce and deliver over 20,000 Lucid Air vehicles, and they plan to roll out their electric SUV called a Lucid Gravity. They also want to expand their company into Saudi Arabia and China. However, we do have to keep in mind that this company is still a long way off from achieving profitability. On the other hand, we have NIO, who is also an electric vehicle company who will launch their ET7 luxury sedan in a few months. Also, NIO has sold many more vehicles, which number around 150,000 since the spring of 2018. NIO, just like Lucid, has great battery technology, which includes their 150 kilowatt-hour battery pack, which can carry their electric vehicle sedan over 600 miles, which is 80 miles greater and further than what Lucid Group's sedan can do. Similarly, NIO also is expanding worldwide with plans to move into Germany next year and even the United States eventually. Comparatively, NIO is also cheaper than Lucid because the market cap for NIO is around $66 billion, while Lucid has a $90 billion market cap. Now, I personally cannot tell you which company is better because I am extremely biased because I have way more NIO stock than I do Lucid, and I do anticipate that Lucid stock will pull back in price eventually. Also, NIO does face strict competition from other companies like Xpeng and Li Auto. However, from these charts that show their revenue quarterly and their quarterly year-over-year growth, NIO is more than holding their own. However, I think it's very advantageous to hold a basket of electric vehicle stocks, especially if you like all of them, including Tesla and other companies like BYD. Even legacy automakers like Ford and GM are pouring billions of dollars into their electric vehicle research and technology. I also think it's cool how NIO has a strategic partnership agreement with an auto service center in Beijing that uses NIO vehicles for local government agencies, so there are NIO vehicles that are used as police cars, but sadly there are only about 8 of them because apparently they prefer Audi vehicles. NIO is also doing pretty well financially because according to the third quarter earnings report, they brought in around $1.52 billion of revenues, which equates to a 116% increase year over year, but their research and development expenses were quite high at $185.2 million. They also delivered 24,439 vehicles for the quarter, and next quarter they anticipate delivering up to 25,000 vehicles, which is amazing news. Next up, we have a Workhorse stock, ticker symbol WKHS, and they lost an adjusted 77 cents per share, which is much worse than their projected 19% loss per share. They also have a refund liability of around $1.1 million associated from a recall of their C1000 vehicles, which again is not new. However, they do have around $230.4 million worth of cash or cash equivalents on their balance sheet, and overall analysts rate the stock as a strong hold right now. Next up, we have Electra Meccanica, ticker symbol SOLO, SOLO, and they had an 11-cent loss per share, which matched their consensus. Also, they do have cash and cash equivalents on their balance sheet of around $228.8 million, and their firm's research and development costs are only $5.3 million, so this is really good news. However, overall, the company delivered 21 SOLO EV vehicles, and they have manufactured around 182, so they really need to start pumping out vehicles more and getting them out so we can see a bigger increase in revenue. Next up, we have Hyliion, ticker symbol HYLN, and they actually beat analysts' expectations for their earnings per share because they ended up only having a loss of 15 cents per share instead of the projected 24 cents per share, which is great news. The problem with Hyliion is that they have a lot of expenses. For instance, the research and development expenses totaled around $18.2 million, and they also had operating expenses, which for the whole year are projected to be between $110 and $120 million. Luckily, they have cash and cash cash equivalents on their balance sheet, which total around $290 million. Lastly, we have Lordstown Motors, whose ticker symbol is RIDE, R-I-D-E, and they beat, just like Hyliion, their EPS by analysts because they were projected to lose 56 cents per share, and instead they only lost 54 cents per share. And like many other electric vehicle companies on this list, they all have above and around $200 million on their balance sheet, where Lordstown has around $233.8 million on theirs. But for some reason, Lordstown Motors has a hold rating from Zacks Rank. But what do you all think? Comment your favorite EV stock down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.